please give a little bit of grace. Please don't hold anything, myself, anybody else's tools, anything to be 100%. Nothing ever for the entirety of your life will be. Okay. If you find something, please put it in the support tab and we will do our best to get it fixed and updated. So this is literally just a breakout indicator. It has a ton of options and more are coming. I wanted to get these ones out first to give you guys an idea. And then there's a few other things that we're having built in. It was just I want this out first before we go into all the other details, because I wanted this for how I use it and how I've been trading, right? I also think a lot of people will benefit based off of how you're trading. So this whole portion, if you could, pretty please stay muted or put your questions in the chat and we will get them answered. I just want to spend a couple of minutes kind of going over every single thing as I know it. And then as your questions come up, then we'll talk about whatever else. So first things first, breakout strategy, New York Open. Who owns it? Who created it? No one. No one owns it. No one created it. It's not 100% mine. It's not 100% Big Dog. It's not 100% anybody's, right? Like London Breakout, right? It existed. I will tell you, before moving, I wanted to trade New York Open. I wanted to actually create my own New York Breakout because everyone had such success with London Breakout, right? And I could make money there, but I couldn't live my lifestyle that way and be a functional human being. So had to back off that. I knew I was moving to get a better time zone. And that's around the time I found out about something along the lines of Big Dog. See, because I thought I was the guru or the genius who had created, hey, I'm going to do London Breakout stuff in New York. Needless to say, I am not. He is not. There's a plethora of different versions of New York Open breakouts, from 2 minutes to 5 minutes to 15 to 1 hour to pre-market to post-market. There's a ton, okay? I don't want to be the end-all be-all voice on it. I want everybody to find their own ways to see it, right? That's my only goal, is if you can find a way to use this that is profitable for you, that's my only goal. So that's on that, the history, what it is. All this is really is a breakout box, okay? It's set up with a lot of things in mind, and there's a few things I have left out still of how I would be doing things and how I do things manually that are going to be added in time. So as you guys know, all this indicator is doing is taking the time frame that you're on, okay? The time frame, so if that's the 5 minute, it's going to totally surround that 5 minute candle from the high to the low, not open and close. And that's it. It's going to take a 1-to-1 and give you levels. Notice they're not labeled take profits. They're not labeled that. I didn't want them to be labeled that. Ideally, this should have a middle range. There's some coding issues. That's what we were working on yesterday for 15 hours was the pre-paint at open. Because it works great, but the pre-paint at open was not pre-painting. And I think I messed it up somewhere. We'll have to fix that. But this open, this middle range, super significant as well, because you want to know. The coolest thing about that is if you go back in history, this is just NQ, you'll really see, this is all the way on the 1 hour, let's go to the 15. You'll really see the days, okay, so we wake up, we slow down. Like if you're going with the direction of the day, you get chop days, yeah? But if you're trading appropriately and sizing appropriately, you can still be profitable even on chop days. You'll also notice, cool, the days where we just kind of stay, I think YM is a good example for this topic, but we just kind of stay in that opening bell range, meaning the whole day didn't do anything. And it helps, I think, calm your mind a little bit. It helps show you, wait, like this day, for example, all day long, we just stayed there. This is New York. So this is all the way, this is New York closed. We popped up, we popped down, we popped up, and that was it. And so nothing happened that day. So whether you won or lost, it helps you understand, well, I understand why we just didn't do anything that day. I think it's very peaceful. It brings a peacefulness to trading. It'll also help you stay out when there's days like this. You're like, holy cow, this candle and the ATR and other things that we've worked with have ideally showed you the same things. But hey, this ATR is way too big. I'm not chasing this range today. This is too big. It's done too much. I would need to pull back entirely and then try to take a trade. Like it'll help you exponentially in some of the decisions you're making. So that's that, where it comes from. Essentially, all we're looking for is a breakout. Remember, for any breakout strategy, regardless of the rules you're using, you need a few things. You need momentum, right? You need volume, right? You need some catalyst. Hence the reason people use breakout strategies around news, right? They use it around London Open, New York Open, They do it around Asian for like metals and oils, which we're going to talk about here in a second too. The amount of uses for this are endless, but it's going to take time to learn. So that's just the indicator. That's what I've got. Before I go any further, if you are already profitable, meaning you are withdrawing, okay? You're withdrawing from your personal accounts, you're withdrawing from prop firms. And I don't know where you're at mentally and emotionally. I would definitely say, hey, look, take this with a grain of salt or pop off and just stick with what you're doing, because I don't want to overwhelm. I don't want to confuse. I don't want you to lose the progress you're making. If you're already withdrawing, you're part of the 1% who are. So there's no way around that, okay? That's number one. If you're not, let's say you're the guy who can pass the challenges but can't withdraw from them, some of the rules and the concepts that we're going to go over are going to help. In fact, that's why I started working with this, is I can pass a challenge. Like I didn't realize how easy it was with futures. It was like, it's stupid easy. I can pass a challenge, no problem. But the rules and the stuff that goes into it, once you have that PA account, that eval account, or whatever they're calling it, the live account, whichever version from whatever broker you're on, there's a lot of things that go into it. So I personally think that this kind of setup and all the things we're getting ready to go over helps put some of those trades in a box, some of that risk to reward in a box, and it helps put some of the problems that you're feeling your challenges with under control and get them under your thumb a little bit better. So that's on that. I personally have been using this mostly on the 2-minute time frame. So how I'm personally using this is I go to my chart, typically, after I get home from my walk, I will mark up the 1 hour trend. Okay. I want to see what the 1 hour is doing. I want to see if there are any trend lines that I need to be respecting. I want to be able to mark up my areas of interest, right? If you have not seen that video, please make sure you go take a look. Okay. And I start there. So I'm going to always go see what the big time frames are doing. Most of the time, 1 hour. If I need to go bounce around, I will. But I want to see my areas of interest. So where are my next stopping points, my next hesitation points, my next congestion, right? That's the first thing I'm doing. 100% of the time is 1 hour. I want to see if the trend is up. I want to see if the trend is down. I want to see what we're looking for. So right now, obviously, all these instruments are mostly 100% up. We already know that. But I want to know, where are my areas of interest? Where's the trend going? Step 2 is I'm going down again to the 1 hour. I want to see pre-market high, pre-market low, and that I didn't learn from anywhere else. That I've learned from this. Because if there's these big gaps in the market, we don't see them as gaps based off of the time. But if you're using regular trading hours, and other people who are, more importantly, people who are not using charts, they're using regular trading data. I hope you guys all caught that. So for people who are trading and don't even use charts, I'm going to make this a different color. They're using the data that's here, which means they're not getting any of the information that we're making decisions off of here, right? If a large percentage of people are making decisions with this information in mind, and not this information has quite a bit of value, right? So the whole opening bell, pre-market high, pre-market low, that zone gaps that are created from regular trading hours to extended trading hours, I find those to be very relevant. Not in the same way that I think people on YouTube are teaching about it, but in a way that those levels have a very big relevance because of where people are trading at, right? You don't have to use them in any one way. Of course, you can find your own way, but I would like to know what yesterday's close was and yesterday's open was on an instrument, and that's stock market hours, right? And I'd like to know what pre-market did, open and close, the highs and lows there, because those two bits of information, when they conflict, it creates different things on the charts that we're not looking at because we're looking at the chart. We're not looking at the value of that information. So that's why I marked those up. That gives me 2 green lines like what we saw here and 2 red lines. If they're pretty close to the same, I'll usually just take that midpoint and then that's fine. Like in this case, we broke through pre-market high. Cool. If we are to continue, we already know this is the data they did not have, right? It's kind of cool, but we'll go over that here shortly. Back to a naked pair. And that's it. How I'm using this, you don't have to use this at New York. Okay. You can use this to trade. There are quite a few people who are doing really well trading things like metals and oils in Asian session. I've never done it personally. I can't be your voice of authority, but you can decide, hey, wait, I'm going to go and trade Asian session. I want to see what it does at 8 p.m. every night. and see if I get that breakout or whatever time zone, whatever time frame, et cetera, based off of where you live. Options are endless. But let's go over to the settings real quick. And then where we're going to end on is break, retest, and management. So yes, I already found one typo. Actually, I didn't find it. Somebody else did. Line range will help you extend it longer or shorter, totally up to you. The risk. Please take this with a grain of salt. We probably get 15 billion emails on the US 30 copier and questions saying, please pick my lot size. I cannot. The variations are too big, right? The same thing goes here. This is a good tool to give you a good guesstimate. There are variables. Please plan on that. But in general, if I'm trying to risk $500 per trade, the thing that this is going to give me, okay, is pretty darn close, right? It's going to give me a pretty good basis. There is a lot of math that goes into there. Ideally, we wanted this working with Forex too. I don't think it functions as well for both. If this is intrusive to you, obviously you can take it off. Totally up to you. But I wanted you guys to have it because at least it will tell you, hey, if my stop loss is about this big and I've got 2 contracts on, it's going to give me about $500 risk. It's the closest thing other than the ATM on AMP, which I still have yet to kind of perfect, to giving us an actual contract size. We needed it. I needed it, most importantly. I needed it, which has helped tremendously. But back to here, inputs. You'll notice, of course, you can turn on the shading for certain sessions. You can label this whatever you want. If you want to label this, Jenny B breakout or big dog or, New York opening range, you can do that. You want to label this London breakout, you can do that. You can even create one that you have turned off. And this is what I have done on my personal one. Create one that you have typically turned off, but I have it labeled as AMD. Okay. Accumulation, manipulation, distribution. So when I put this on, it's going to give me a certain box and I'm going to turn it on and I'm just going to go type in the time, which we're going to go over that here in a second on the chart. But when you find those areas of accumulation and you want to see what happens, I'll show you a really good use of this tool that will help you take the breakouts of that kind of AMD, right? And some people say 10 a.m., some people say 3 a.m., just an hour after London open, an hour after New York open, right? Same kind of concept, but we'll go over that too. Mine is set up with New York. I don't typically do any of those, but my last one, which I only turn on when I want to come in here and manually add a time frame. So let's say I'm seeing some consolidation, or I can come in there and I can put 2300, right? Based off of my time zone. This is important too. And now I'm going to have this draw out. Let's say I want to draw it out by 30 bars. You'll know that again by measuring here. And now I just want to see, hey, as long as we've got that manipulation, which I'll show you here in a second, I'm looking for the distribution on the other level. The uses for this tool are endless. And I think the way it will help maintain you and refrain you are awesome. That's the best part for me. Time zone, very insignificant. I had the developer make sure this was relevant to New York. Please know, based off of the time on your computer, the time on your trading view, this might need to be manipulated. Where I'm at right now, mine is -5. Yours could be different. I don't know the settings on your computer or your trading view, so take that with a grain of salt, okay? 100%. Session box, of course, you can have all of this turned on and off. Even the label arrows, I don't prefer that on. I really prefer that off. That's a topic for another time. If you don't want this on, you can turn that off, okay? If you're saying, hey, wait, I don't understand that. I don't want to see the ticks. I don't want to know the contracts. I just want to see this really clean for now. You can. Middle line, I do want to make that a little bit darker. But also alerts. This is going to tell you when price touches that line. It's just telling you when price touches those lines, right? Kind of cool, especially if you're going to manually trade the 2-minute time frame and also want to track the 15-minute time frame for New York. That means you come in, like in my case, I get my whatever, couple $100, whatever, how many accounts, or sometimes it's bigger, sometimes it's, 1,500, $2,000 on a couple accounts. I'm trying not to do that. It's hard. But let's say I get that, but I still want to be able to track that 15-minute breakout. I can come and set that up very nicely. So kind of awesome. The labels particularly are for breakouts. And the reason I don't have those on is because I would prefer people to use the retest, which is where we're going to go land now. But ultimately, the uses are endless. There's more to come on here that we already have kind of pre-built. We just need to test. One of them is going to have to be fix this, including the marking up of levels, right? The retests. the daily bias, okay? All of those things. Because I promise you, no different than anything else we're building, this will not win every day. This will not have a setup every day, okay? There's days where it's just too choppy and then it just is a mess. Can't avoid that. And the problem is we never know what day it is. We all like to think we do or say, hey, avoid the news or avoid this or avoid it. Doesn't work. You never know. The news might have been the perfect day that day. The no news might have been the perfect day that day, so there's people from all walks of life. Don't jump on any one of those bandwagons. Honestly, you don't know what you don't know. So let's get over it and just do the best we can every single day. So style, all pretty self-explanatory, boxes, labels, lines. I like the box. I like it a lot. You don't have to. And visibility, all pretty basic. So there's that. Alert condition, kind of cool because you can actually, not yet, but you will be able to potentially automate this. Okay, let's say that one more time. Not yet. There's a few things I need to finish building, but you will be able to automate this using systems like Tradeify and Pick My Trade. So I hope you guys all heard that. If we do this right, you will be able to automate this to take a very small percentage, which is why the whole small thing is so important, especially if it's automated, okay? Within the coming months. It's probably going to take several months before we're there yet. Just too much with lot sizes and other things, but we're working on it. So that's that in terms of settings. I will turn the arrows on just so you guys can see real quick. So you see we broke down. This is crude. It's going to end. We broke up, okay, here and here. You'll notice the candle in which you get the arrow is the candle that closes outside. The ghost alert that I believe is talking about is when we touch, right? And that's going to be part in your conditions that you set. And we can talk about that a little bit further. That alert needs to be perfect because of the reason for automation. I'm looking for questions. To use the confirmation for gold and Asian session. There's a lot of uses there, and you can be our guy. You can be the guy who just masters that part. And maybe not me, maybe we don't know who, but you might impact just a few lives, right? Just a few. If you become that guy who's really good at gold and Asian and can kind of share what you're doing on that journey. So again, I don't personally love the arrows. We have them up because we know people are going to want them. So let's look at the good, the bad, and the ugly. This is Nara's. Thank you on the 5-minute. We close here. We don't get any continuation, right? Which is what we're going to start talking about in a second. Arrows is a great example. Close but no continuation. You get a retest, which is kind of nice, right? You get this breakout, kind of nice. Trading into this little area, not so nice. But there's no way to know. There's just 0% way to know. Whereas this one, you break out, one candle, so you get this big extension. This retest is perfect. Doesn't exactly touch the line, but that's a retest. Beautiful. But of course, there's no way to know. In real time, we all like to pretend like if you do this and this, you're going to know this and this. You're not. It's not going to happen. This one is perfectly clean. We break out. We retest back in. Perfect. Beautiful. That one's awesome. Let's just keep going. This one has us selling quite a bit. We do eventually come and hit that 1-to-1. So on the first one is here. Breakout, retest. Come back in, retest that 50% mark, come all the way down, break out again, and by then I'm over. Remember in the settings where we said we could extend this out? You can extend that range all of New York if you choose to. You can also extend it just for an hour if you choose to. All things are possible. There you go. Hour, no continuation. Good reason to wait for a retest, huh? Bounce, retest. You've got a reason. You can get a retest here and here. And both of these trades play out with no real drawdown. So just to kind of show you all the things. And this is just one instrument, 5-minute time frame. Here you go. You get to your trade. I'm going to zoom in so you guys can see. If we take it, the next candle gives us a retest. We get the move. We take it. Well, doesn't get much one. But again, if you have your stop loss at that 50% mark on the other side, you made your monies on how you look at it. But that's that. Let's go take off this arrow. And then let's talk management. Like Trading Rate that connects to Trading View. Yes, it's just very tricky. It's not cut and dry. It's just not cut and dry. I wish it was. It's just not cut and dry. And that's beautiful. Again, we get a breakout and we get the retest. The retest is hard as heck to wait for. But that's what we're here to talk about now. So management, Do we take a retest or we take the break? At the end of the day, 100% of the time, it is up to you. You'll notice that prior to this call this morning, I removed the 1 minute time frame. I definitely think it was to my betterment, without a doubt. But for you, it might not be, right? For you, it definitely might not be. For me, I don't want the 1 minute on there. Obviously, we can go down, let's just for conversations go here. Okay. Even at the 30-second mark, we break, we hit that level easy. We break, we hit that level easy. Cool. There's going to be plenty of times where you're going to tell yourself that if you don't take that instant trade, you're going to miss the move. And that might be true. But your trading plan needs to come into play with that thought process, 100%. This is all the way on the 30-second time frame. We break, we do not hit that. We break, we do. We break, we don't. We break, we do. Okay? Over and over again. The amount of times where it does or doesn't, it's going to be 100% not reliable to be able to guess. 100% not reliable, no matter what. So back to management. I don't keep the arrows up. I don't think that they're going to give me enough information. Definitely something to consider. I will check out that though. This doesn't close above. So remember that arrow, just like a fractal, won't be permanent until the candle closes. Okay, so if it comes up and it touches, it's going to appear. But if this candle doesn't close there, it's not going to stay. So it's only permanent on a closed candle if you're using the arrows. But let's talk closes. I'm on the 15-minute time frame. Here we go. We are breaking out now. So for example, we've already got one breakout and we retested back into 50%. That to me is a great trade. If I go to the 2 minute, what does that look like? It looks like I broke out. I've formed this flag. Okay. And now I've got this trade where I can manage on the 15 if I want. I can manage on the 2 or the 5 if I want. My stop loss is incredibly tight and almost no drawdown, and I can take that trade. No drawdown, no nonsense, no misery, no nothing that goes into that. The retest is 100%, in my opinion, the safer way. I think a week or two ago, I was using this. Of course, Nas took off without me. There was no way I was going to take that. There was no place for me to get short. It just did not happen. There was no place for me to get in. It just tanked, right? All gone. Bye-bye. Same thing on a buy, not that long ago, a couple weeks ago, I think 3 weeks ago, whatever. It just took off, right? There was nowhere for me to get long. I need some kind of a pullback. I personally have found that this breakout strategy works really well. Here's the things that I think work. I think waiting for the breakout and that pullback, meaning a flag to form, is all you're really doing, is the retest, pullback, flag, all the same things. They're never going to come exactly where you think. Draw a little trend line and wait for the breakout in that direction. So now you say, hey, look, I'm trading the 5 minute. We broke out. I didn't want to take it. So I wanted to wait for the pullback. Cool. We came back to retest. You can take it based off of the touch of the box. You can take it based after the forming of a bullish candle. You can take it based off of the bearish rejection, especially with lots of wicks. We don't see that here. There's a whole host of different ways to do that. If you're taking the retest, personally, I'm using 50% of that range most of the time, depending on where that retest came, which is limiting my stop loss. It's increasing my risk to reward. If you're taking the breakout, I typically am using the whole range, which is really minimizing my risk to reward. I'm getting closer to a 0.5 to 1 or a 1 to 1 at most. And the biggest reason why is because if I'm taking this on that first second, I am going to be babying every inch of this move, right? Because we don't know, especially on the tiny time frames. We don't know if this is just going to, where's my annotate? Hold on, annotate. Pump up, okay? And it looks like it's going to do this, but instead it closes like this. We don't know if that's going to happen. And so to avoid this, if this one problem can cost you $1 million account, because it can, especially if you're trading the minis, right? This one situation, different rules, different platforms. I don't want to go into all that today, but remember, your high watermark matters, your max drawdown matters, your max trade size matters. It's all part of their little equations. If this one candle, even if it's this size, for example, can ruin $1 million funding, because it's $1 million, right? That's what 20 accounts is at 50,000 accounts. It's $1 million in funding, you guys. One candle can destroy that. We probably need a plan. So if I am ever taking the breakout, the biggest things that I'm doing are, as this candle is pushing up, I'm going to get a different color. I am continuously locking, moving my stop loss up, okay, and moving my take profit up. Just trying to capitalize a little bit at a time, a little bit at a time. So I'll keep moving my take profit and I'll move this stop loss up, kind of just letting price wick around, because what is price going to do inside this candle? It's going to do this, okay? So as it's doing that, well, this one gets hit, this one gets hit, this one gets hit. If it does tank down, I'm out with profit. And at least, even if I've lost some of that distance to drawdown on Apex, for example, at least I'm in profit. I did not blow. But if you let this come and it closes here, that's literally this one move, one candle. Doesn't even have to be huge, doesn't have to pull an account. So how I'm doing this is, I think, where the secret sauce lies, right? That YouTube worthy secret key, the YouTube worthy secret key. You can take this trade, but if I'm ever taking a trade using this kind of setup, whether you're doing it at 8 p.m., London breakout, okay, London, New York open, and we haven't even talked about that yet, but news or AMD, okay, talk about that in a second. The uses for this are endless, but they're going to be good, okay? No matter which one of these I'm using it for, if I'm ever taking the break and not the retest, I'm managing it very differently. So for the breaks, not retest, I again am going to continue to choke this up with my stop loss, and I'm going to continue to edge up my take profit over and over again, just capitalizing on this. Because sometimes on those days, the market does this and you caught a huge move, okay? But sometimes the market does this and you have no way to know which day is which. So you need a plan in place if you're taking the break. So I think that answers that one question that you had. Big difference. Let's see,
Yep.
Pete, you got anything to add there? Because I'm again open to this conversation. This is going to be where people are like, I love this indicator or I hate this indicator. It's the decisions they make here.
Regarding your management, why not just set further away take profit and then just manage your stop? I guess I can play devil's advocate on that, because if you do that, your take profit, if it hits your take profit and you let it hit your take profit, that's the thing about moving your take profit out. If you let it hit your take profit, you're taking it out at the top of the range. If you're doing it with your stop loss, you're taking it out at the bottom of the range.
And it hurts you when you take it out of the bottom of the range. It doesn't seem like much, guys, but on NQ and I'm more experienced with gold and YM for the full size minis, but NQ, I'm getting a lot more comfortable also. It doesn't seem like much, but if I get knocked out with my stop loss in profit versus my take profit in profit, and they're even reasonably close, this has a much more positive impact on my account. That includes the distance to drill down, which in my journal, I'm labeling this DDD. Okay, the distance to drill down is something I'm really trying to baby, because it's the difference in me getting $1 million payout or my first goal is a 6-figure payout, and then is $1 million payout, because I think it can be done. Okay. And I'm not there yet. No kidding. Not there yet. But this is a big deal because remember, there's fees and stuff involved. So I've learned how to get a lot more comfortable with, on this move, I only got this much of it and I took my take profit here, and being very happy with that, because if I had went up into here and like let it pull back, for example, if it wicked down, sure, my account is safe and not quote blown, but I'm in a worse position on the next trade to be able to not only have the distance to draw down, which is a key factor. And then of course, another factor is that whole, your average win versus your average loss. Oh no, your average win closed, by the way, their formulas are stupid. Your average win closed, which means including all the scalps, okay, to the distance and drawdown. So for example, if your dollar cost averaging in and you let this run against you, this distance to drawdown, if it exceeds that 5-to-1, whatever their formula is, you've blown the account. Even if this trade won in profit, you've failed and you've made a mistake. So because of these random rules, I've gotten much more comfortable at kind of fighting both sides of that very actively, particularly on Apex. Obviously, Top Step is much simpler, but Apex particularly, I want to get out with take profit if I can. And it's hard because take gold. I took gold last night, and I've got the screenshot and stuff to say, hey, I got this much of that move that went to here, you know? It's very difficult because, hey, on NAS, I got this much of this move that went to here, but I need to be able to maximize all these rules. So for that reason, it costs more for me to hit a stop loss than it does for me to hit a take profit. I earn more not only in monetary value, but in room in my account. Kind of a big deal. But that's on that. So back to the whole taking retests or breaks. I think this is, again, where people are going to love or hate this. I accidentally removed the London, the AMD. If you know news is coming out, this would be a good indicator to use for news. People are doing gold and even oil. So Asia, I'm sorry for that. Whatever. I'm going to do it gold and oil. You've got New York open. You've got a whole host of different things you can use for this. Okay. But I still would refer back, with the exception of news, okay, and AMD. With the exception of these two, your retest is almost always better, even if the market took off and you never got a chance to get long. Even if that is how it played out that day, there are either other pairs or just no trade that day versus always taking just that break. If you are choosing to take the break, you're choosing to manually manage quickly. So I'm going to say that one more time. If we're choosing to take the break, you're choosing to manually manage quickly. The whole concept of, oh, I'm going to get this perfect one-to-one and no middle management, it will work. It'll work enough of the time, I think, to be profitable from what we've tested. But I think that you're going to have a net greater value if you manually manage, because we want this to give us a little bit more. We want this to not stop us out. We want this to work out a little bit differently. So that's on the break. On the retest, you really got the confirmation on the day. So let's talk about holding, right? Again, your prop, your rules, your brokers, your capital, your lot sizes. I have no control over that stuff, you guys. None. I cannot help you there, no matter which language you ask me in. I don't have any solutions for you. I will say, once we have the direction on the day, not every day, but if you go back historically, most of the time when you get the direction on the day, you've got a really safe direction that you're trading, right? For the most part, most of the time. So then every retest of the golden strategy, for example, or Ichimoku, if that's your jam, or the 21 or the 10, whatever it is you're using, every retest and flag formation, now you can take multiple trades all day long on this direction. So once you get that retest, you form that flag, you form that pullback, right? You've got the retracement, whatever word your mind hears best. Now you can decide to take this trade, manage with the 50% mark, which is going to give you a 2-to-1 if you're using here. Manage with here if you want 1-to-1, 0.5-to-1, depending on where you're putting your management. You need to try this for yourself. But as you're into profit, you can decide to keep trailing this up with the 21 moving average, okay? The VWAP, okay? The 50, right? Golden strategy, right? Whatever you want to do. You have all kinds of options to be able to say, okay, so now that I'm in this, and again, based off of the rules on your prop, the rules on your account, your capital, your lot size, your tolerance for risk, the time that you have involved here, all the variable factors, you can decide now how you want to manage it to where these trades on Sundays are giving you those 10-to-1s, those 5-to-1s, those 3-to-1s, and you're really capitalizing on the markets. But that's that. So that, trying to think, we went over break and retest. We went over the management. Okay. You can, of course, use that 50%, the other opposite of the range, and you can even do a much lesser management. We went over who created, the New York breakout. I don't think anybody on YouTube, including myself, owns that. Shoot, when I first heard about it, I thought I was going to get a guru, and then I found out about Big Dog, and since then there's like 5,000 other people with variations. And I say that to say, create your own. This is a good tool that you can kind of manually master according to where you want to land, the instruments you want to trade, the risks that you want to set up, the retest or the breaks that you want. But here's what I will tell you. If you actually do this and you get good at it, okay, you might find, holy cow, trading is a lot easier than you make it on yourself. So the last thing I'm going to talk about is AMD, which is what is it? Accumulation, manipulation, distribution, right? It's one of those terms coined by somebody else, but we're going to talk about it. So I'm going to remove all this. Whoopsie. One use that I've had for this, and I was building it with this in mind. So I built it with New York in mind, and I built it with trying to find breakout points, right? There is a name for that consolidation. But either way, this is, the trading world. So what do you do if you come to the chart and remove this and you see, this is a good example. Actually, I think we were taking trades on this day and this was the manipulation. But what do you do if you come to the chart? I'm going to just keep this as a white box. And you see from here, for example, prices accumulating, prices consolidating, right? You know that before you get this big breakout, what are you going to do? You're going to get a manipulation. Not 100% of the time, but many times. Your first breakout is going to be manipulation. This is a spring, all the things. You guys can see that clearly. On this day, we saw this. We wanted this out. The manipulation just came late. We were hoping this was it. I was hoping this was it. The manipulation is here. So accumulation, manipulation, distribution. One way to do that is to take that center portion of that range, find that 1-to-1, okay? Let the manipulation go against you by at least that 1. And then you're targeting here. So for example, if you use this range, if you go type in, it's never going to be perfect because remember that tool is based off of a particular candle size or candle location. So if I'm picking one, I would end up having to pick, I can't pick a 4-hour. I don't think it would work even on the 4-hour. The 4-hour would give us this range, give or take, right? So we're going to go to the above. That's our sell down. 1 hour. Coming all the way back into here. The range that you choose is going to be based off of the candle that you're looking to kind of bounce around. So this is that 1 hour. If I'm using this one, we bounced above. If you want to come a little bit further out, this is our bigger candle. All you have to do is go into the indicator, and I have one labeled AMD on my own personal one. Type in 10 o'clock. It's going to give you that range. Let me unclick that so you can see this first swing is just the manipulation, and then you're selling it down. So now you've got a scalp if you want it and the trade if you don't. And a beautiful setup. Beautiful way to go find those consolidation points. That's all. So in this case, you get the swings to the downside. I wouldn't include that first swing. And then you trade up. If you go find all of these consolidation points, all you'd have to do is find the first candle needs to be the right size, though. And that's going to be the tricky part. That'll give you the bull side of the range. And then boom, you don't get any manipulation on this one. F2 choppy to use, but kind of cool. This is the other purpose of what I wanted it for. So we were at all-time highs here. I'm going to have to remove all of these, sadly. What day was this? This is November. This is probably right on the time I was starting to use this. Hold on. So for example, I go in there and I type in this range. We manipulate to the upside. So I know if I'm taking the break or the retest kind of concept, this breaks up and we settle down, right? So we're breaking up. And that's on the micro time frame. You can go to the bigger time frame, get a different view. I'm going to have to go pretty far back on that. Big time frame. If I use this candle, break below, come back in all the way across, and boom. Kind of like it. Kind of like it a lot. But just different uses for it. Really, it's just a breakout box. That's it. All fancy other things, just a breakout box. And you can use it in a whole multitude of ways. If you know news is coming out at 8, you can have it pre-programmed for 8 o'clock. Let that first, whatever time frame you're on's candle form, and then take the break in that direction. For news strategies, you're definitely going to want a smaller time frame, but probably less than the 2 even. The uses are endless. Absolutely endless. So now is when I would open up the floor. Anything else that you guys would like me to cover or questions that you guys have thus far? Let's turn this back on. We're coming back into that range now. Beautiful move. Second move. If all we did was take these breaks, this one without the retest, this one with the retest, you've got your move times 2. Just one pair, one time. Any questions, comments, anything along those lines?
Yes, I have a couple of them. Good morning, everybody.
Good morning.
So when I looked at this, I'm thinking as anyone, I mean, when you release it, probably I'll run the stats and see if you just took the breakout and do a 1 to 2 risk to reward, I think you're going to end up profitable.
With New York Open,
Yes.
yeah, a 1 to 2 risk to reward if you just take the breakout.
Yes.
Yeah, I think. But so pick your pair. So I know you trade a lot of US 30. The hard part is days like this. People are going to try to make this the breakout, right? Because we close on that line, but we don't have any extension. We didn't close above the zone. We just stayed at it, So there's definitely some human portions, and that's why the whole automating it is such a topic, is getting the human and the technical sides, put together. But same thing here. So we close on it. This is the candle that really starts to extend. We want some extension, guys.
As long as you don't have a bad relationship with losing, you shouldn't have a problem.
Yes, there you go. Okay, well said. I like it. I like it. I like it. Okay, so that was the first question.
And secondly, according to ICT, 70% of the opening range gap close. So you could also decide and say you take the breakout in the direction of the opening range gap. I think that increases your edge.
Oh, God, yeah. Well, here's the opening range gap, which is to the downside, which is why I figured we were going to that balance. So wait, I know you watched that video that I just posted in Discord and in Telegram with a guy. I love him. His energy is just amazing. I think he would be good people. But you see how chill he was? He was like, look, we don't know. He goes, I work in this stuff. I don't know. He's like, the guy at Merrill Lynch doesn't know. He's like, the guy running this crap doesn't know. The truth is, we don't know. Like, and this right here, this direction of the opening, the gap is to the downside. So it's fake. I was targeting away from that gap.
You just don't take the trade.
Yeah.
I mean, if that's the way you want to use this tool, then you don't take it because it's against the rules that you have set for yourself.
Here, there's the gap. I wonder though. That's the gap to the downside. They weren't going to let it fill. That's the gap to the downside. They just, on this day, it targeted the gap perfectly. On this day, it was like, screw that gap. I'm just looking back because I'm curious.
And that's
Fine. Gap to the upside. So 1 out of what, 10 or 12 did it target that gap? Yeah. Hold on. Otherwise, NQ is, because it's so heavily traded on futures, I feel like it would be the outlier anyways. I don't know if it's the same on YM. So this one we targeted the gap beautifully. This, I think YM, we target, look at that. Almost every one of these targets the gap. So YM targets the gap impeccably, but NQ doesn't. NQ is like, oh, there's a gap. I'm going away. Look at that. All right, cool. I just wanted to see. I just wanted to see for sure. I was curious. But guys, use it in conjunction with the gap. One of the people that I've been working heavily with futures, same person I'm running the hedge fund with, they've never done futures either. So we've been doing a little bit of pre-market stuff, which is so smooth. It's just so easy. Like if you're going in that direction, wherever the trend is going pre-market, you get your one trade, you're done. Like you don't have to go worry about New York. It's easy. Easy peasy. Beautiful. Obviously, there's going to be outliers. Obviously, not every day is going to give you what you want. Obviously, some level of active management is going to be required. So that brings me to kind of stop loss topics of, I think the biggest difference is I'm not putting a hard stop loss. I will draw a line, and I'm trying not to do that either because then I mistake it for open orders, and that's a whole nother can of worms, but that's a me human issue. I will watch what price action is doing. So for example, on NQ, I think it was last week, I let it bounce around. On gold last night, I let it bounce around. It never closed below the levels that I was looking at. It just kept wicking down, and it took off huge. I got the move that I needed, right? But your stop loss is going to be super important. Your active management for futures is going to be super important, particularly on these prop firms. If you have enough funding, figure at least 5-10 grand in AMP to go trade futures. I'm very excited about it. I'm very excited about the stability of price, the way things move. I really like everything I'm seeing, but you do need capital.
Just really try and make this thing work. Is at New York Open, the market is going to go either way. It's going to go one way. It has to leave the opening price.
Yeah.
So, I mean, if you just make it a positive expectancy system by increasing or doubling your reward vis-a-vis your risk, and you have a good relationship with losing every now and then, you will be profitable. You can also choose to lock at break even and then let it be a risk-free trade and see if you can double your reward.
This is no retest. So we broke out. That's your 1-to-1. Actually, if you did it here, guys, this is YM this morning. So if we just took the breakout, figure you're never going to get exactly at that point. You're never going to get exactly there. You're going to close as it comes up there. You're going to be closing as it comes down here. That's your 1.5 to 1. 1.5. Definitely not bad. Just taking here. It went to do.
I will use the whole range as my stop loss.
Oh, I know you will. I know you will. But but you also lock profits. So the way you do things is totally fine because you lock profits along the way.
Right.
And let me not use that word mistakenly. It's not that you lock profits, you scale out, correct?
Right.
Big difference, because when you lock profits, you get knocked out. But when you scale out, you got some. And
Scale out, lock it. It takes me out, gives me another arrow, I get back in.
yeah, there you go. There you go. YM is moving up this morning. So we came here, we retested, we're broke, looking to come fill the other side of that range, which is going to kind of come clear this high. It's going to clear the overnight high.